Welcome to your Mortgage Insider update for this week. Ahead, we've got the CPI and the PPI, so Consumer and Producer Price Indexes, both inflation reports coming out on Wednesday of this week. Got to keep an eye on this because the unemployment rate actually ticked down last month to 3.8%. So an immediate conversation was opened around whether the Fed doesn't lower the rate at all this year. It could be till 2025 before we see a rate cut, according to some of the talking heads on Wall Street. We will only have to wait and see as the data-dependent Fed continues to get inflation and unemployment reports that are stronger than expected. So let's see the charts. So we start off with the 10-year Treasury up another 4 basis points. We can see as the charts show us just a stair step higher after hitting our lows right at the end of March. We are seeing April has just not been kind to the interest rate market, as we've seen anticipation ahead of the unemployment numbers that came out end of last week, and just marching back higher. We're going to actually have to take this chart a little ways back, 6 months, to see that it's been a while that we've carried rates below, since November 27th, below this 4.43 number, where we're sitting at right on today. So can we find a ceiling and hold steady with rates? This was not a very pretty time back in October of 2023. So could we get there? Absolutely. But with all this Fed talk and the assumption that the Federal Reserve would be able to cut interest rates this year, we're going to have to wait and see where that lands us. Mortgage-backed security charts work in the inverse of the interest rates. So this is the price investors are paying. So they're paying less today, not demanding the high prices on the mortgage-backed securities. It means interest rates to consumers is going up. Similar time frame, 6 months back. We're not quite as bad on the mortgage-backed security front, since our low points, so high interest rates back in October, have given way to steadier rates. I mean, in a range, it's come down, it's gone up. So we haven't broken below what would be the 200-day average here with the mortgage-backed security market. But any bad news this week, or higher inflation coming up with the CPI and PPI, could see interest rates rise as the prices could fall below this 200-day average. We'll just have to hope that doesn't happen. So we'll start this beautiful April week off with the hope that interest rates won't rise any further, but the reality is we don't control any of it, so we're just going to be along for the ride. Come back and see this next week. We'll give you another update. Take care.